Welcome to my $100,000 stock experiment, Sell Rules, Week 17. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I've bought, nor is it an endorsement to purchase stocks in general. My focus is on sell rules. This needs daily attention, and it is not a buy and hold strategy. We previously talked about market direction in another segment, and I just want to touch on that again. The Investor's Business Daily, which I read, has three different categorizations for the market. The confirmed uptrend, and this is a time when I typically buy my stocks. This is a time when they think is a good time to buy stocks. The uptrend under pressure, you want to be careful. The market is showing signs of weakness. You might want to be selling some stocks that you're not quite so sure of, and be very selective in your purchases here. And then a market in correction when you really want to be getting out of the market, selling your stock, not making any purchases. So week 17, the market moved from a confirmed uptrend on 7:30, which is a Monday, into uptrend under pressure. And that was short-lived. The uptrend resumed a few days later on 8/2. At the end of last week, I had identified four potential stocks to sell. The first one is Health Equity. I did sell that on 7:30 at $74. I had held that stock for 12 weeks and I have a gain of $688 or 6.9%. I also sold PayPal this week. I had held PayPal for 6.8 weeks and I took a loss of $315.90 for a loss of 3.17%. The third stock that I sold was USA Technologies for $13.65. I had only held this stock for a week and a half, but it did trigger the 8% sell rule. I took a loss of $868 for a loss of 8.7%. I put a red arrow on this spot that's showing you the space between the 10-day moving average, which is the solid green line, and the 25-day moving average, which is the solid pink line. So as the green moves away from the pink, that means the stock is accelerating faster in the 10 days than it is in 25 days. And that is what you want to see. In a downturn, when it starts getting closer to or crosses underneath, then that is a time when the stock is not performing well in those 10 days, and the 25-day they had better performance. So I like to see the 10-day above that 25-day. So where it's going down here, that's where I sold it. The fourth stock I had identified for sale was Tandem. I identified it where that yellow arrow is, and then Monday comes around and the stock is holding its 25-day moving average. It's not going below that, so I did not sell. And then the next day, it took off, and that blue line is showing you that stock's going straight up from there. So it retook its 10-day moving average, and I did not sell the stock. Since I sold 3 stocks this week and 2 stocks last week, I only have a total of 5 in my portfolio. I've sorted them by loss, and my biggest loss is a negative 0.2% by PetQ. Not enough to cause me any concern, and it had 2 weeks previous where it was up. The huge winner this week is Tandem, up 29% in a week. That's amazing. The 29% gain in a week for Tandem is reflected in the big jump in the bar chart here. Tandem in 14 weeks is up to $40,759, and that's in a $10,000 investment. That is amazing. I've taken Tandem off the bar chart so we could look more closely at the other stocks and see how they're performing, because having $40,000 on the scale is making it harder to read these lower charts that are just average performers. So you can see ISRG held steady, LW was up, Omnicell held steady. So no big surprises here, and I'm happy with these holdings for now. The benchmark is at an all-time high at a 32.88% gain in 17 weeks. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel. Don't forget to hit the bell so you get an alert when I post a new episode.